Last week, volatility flooded back into the markets and it felt like the first meaningful week of 2023. The Bank of Japan defied all market expectations by deciding not to abandon its ultra-easy policy by holding firm on its yield curve control. This kicked things off very nicely indeed, and from there the market found its mojo. Is this a sign of things to come? Hello, I'm Connor Woods, market analyst at ForexSignals and howtotrade.com. Here is our weekly preview for the 23rd to the 27th of January 2023. Now, with weaker data flooding the markets across the board, traders are going to be eager to see how the US GDP figures fare in this probable event of the week. If data is to continue to be weak, then expect the US Flash PMIs on Tuesday to spark a fresh wave of recession fears. Now, the markets haven't heard the last of inflation yet, of course, with New Zealand releasing its CPI print and the US releasing its Core PCE Prices. Now, let's dive into the most attractive market opportunities coming our way this week with our expert analyst in the States, Shain Vernier.
All right, this is going to be an interesting week of trade. It's going to start very slowly with a holiday type of a session on Monday, and then we're going to get into some key events, some key inflation numbers. Bank of Canada is going to get involved, then we're going to wrap the week up with some core PCE readings out of the United States that are exceedingly important. All right, let's head over to the charts and really outline a few key levels. Now, Monday is going to be a big time session for holiday traders. If you're a holiday trader, you're going to love Monday. Out of the Asia Pacific, we have the Chinese New Year. Observation of that, or observance of the Chinese New Year, really is going to take up that Monday Asia Pacific session and also spill a little bit into Tuesday. So beware that our volumes may not be at optimal levels. We may see a little bit of lagging participation, specifically in something like the China A50. The A50 has been on an absolute tear to open the new year. You're up about 8% right now. We have a key level coming into view right up there at this 78% retracement of the monthly, right up here at about 14,269. So as I'm looking at the A50, I'm looking at the charts, I'm looking at the time. Are we going to be trading the A50 Monday? No, not necessarily. But that key level up there, that 78% of this wave may definitely come into play on that Tuesday, Wednesday, or Thursday session. So I'm going to be watching the A50 relatively closely. Now on Tuesday is going to be dominated by the U.S. session. A lot of U.S. metrics out this week, and we'll do our best to sort of outline the price action for one of the bigger indices on Tuesday, the US 500. Tuesday morning, the S&P Global Services PMI flash. We got a whole bunch of those S&P PMI numbers out. Could bring a little bit of liquidity to the US 500, the S&P 500. The idea being right now the entire world is behind that global recession narrative. And these PMI figures, even though they're listed as market movers, sometimes they move the market, sometimes they don't. This is an interesting spot. Are we going to see the big-time price action out of the equities indices on the PMI releases, the S&P Global Services PMI, the S&P Global Composite, and the Manufacturing PMI Flash? I don't know that we're going to see directional moves, but it's important to outline our key levels before we get into these events. For me, I take a good look at this S&P 500 right here. This is the US 500. We had a nice pullback this month and a really a healthy bounce off of that 3811 level, and right now the game really looks to be about 4,000. So if I'm looking to trade this and build a zone, this support zone right down around 3817, that's going to be our monthly, the most current wave on the month pullback. That's going to be a pullback there at 50%. And then our macro, our 2020 lows to 2021's highs, you're going to see these at this action right here about 3811. So I'm watching that 3817 to 3811 to hold up as downside support. If that level does go, then we could see a major fall off. We could see something like 3742, maybe even 3634 come into play relatively quickly. So for Tuesday's session, I'm going to be watching the S&P 500 very, very closely. Now, Wednesday is probably, I would say, our keynote day, and we start off during the Asia Pacific session with New Zealand CPI. Now, right now, inflation numbers are the biggest metrics on the markets. It's central bank activities and its inflation numbers. This CPI release out of New Zealand is going to be key for this Kiwi pair. So as we look at our technicals, we say, okay, what would we be looking to do here? I'm a big fan of the monthly, specifically going into this week. We're getting on into January, so our monthly ranges may have already been made. So if we see some extension extension right from current highs and lows, if we do see some extension, we have an opportunity to cash in on that equilibrium in pricing. So as I'm looking at the Kiwi, I'm looking at the fundamentals. CPI, we're expecting that to come way down. We're looking to go from 7.2% in Q3 to 6.6% in Q4 year over year, 2.2% in Q3 to 1.6% for Q4. So quarter over quarter, we're looking for a big decline in CPI, New Zealand CPI, and also year over year, we're looking for a big move there. So as I look at the fundamentals, I'm looking at the technicals, I'm thinking, okay, what would be a great trade? Well, if we come into that Wednesday session, that Wednesday Asia Pacific session, and we get some good downward trajectory in this Kiwi, I think buying a pullback in this pair is a fantastic move. Maybe not just for a scalp, but maybe a swing trade. I'm looking closely at 61.41. I think that's a pretty good level. If we do, in fact, get a test of that zone, maybe the CPI could be the catalyst for that. I could definitely step up to the plate and look to trade that actively. Now, the other thing I want to point out here with the Kiwi, you have a weekly double top. You have a weekly double top formation going back there to December, the week of 12 December, and then also last week's trade. So your high is right up there around 65.30 to 65.15-ish. That's a healthy double top. That could be viable topside resistance here for the Kiwi. Kiwi is one of my favorite pairs for 2023. I think that buying pullbacks could be the way to go. Perhaps this CPI number will give us the opportunity. Now, the other big event on Wednesday, it's our key. It's the big day of the week. Bank of Canada interest rate decision. Now, right here on the fundamentals, we're looking for them to stand pat. We're looking for the BOC to stand pat at about 4.25%. That was the previous level. We're expecting it to stay right there. So this is sort of Canada stepping off the hawkish train and maybe just dumbing it down a little bit, saying, whoa, we're not necessarily sure that this is what we want to do for the long term. We're going to be data dependent and see if our rate hikes have worked thus far. So when I'm looking at something like the dollar CAD, that's first and foremost in my mind for Wednesday. And if you do get some good movement, you can see the 3-month compression right around that 135 level is very real. At this juncture, I'm viewing 135 as topside resistance. Now, if we do break above 135, then we could definitely start talking about maybe a run towards that 140 level that we saw back in October. So that's certainly a possibility. Big picture, what would I love to see? Wish list time, a big time correction here. This sell-off down in this area, down to this 62% on this monthly, looking at about 132. We've got a moving average down there. We've got a nice big deep pullback and cutting into September's range. I think that a buy from there is pretty good trade location to the bull. So I'm excited about that level down there at 132. Now, there's a bit of work to do to get to all these levels, but you'll find that after the Sunday, Monday, Tuesday session, we could be in the neighborhood of these macro levels, and that's what I like to do. Multiple time frame analysis, spot these long-term anchor points, dive in with our analysis, and then execute our trades. I think the BOC could be the type of catalyst and market mover to get us involved in this market. So I'm going to be watching the dollar CAD like a hawk on Wednesday. All right, for Thursday's trade, we're going to be looking at the dollar index. I think that that's a key. Really, we've been watching it all year long, and you can see on this monthly, absolutely just incredible compression right around 132.35. If you've checked out a live stream, then you know exactly what I'm talking about. You're probably tired of hearing about 102.35, but right here, this is good two-way action. Is right. It's holding up. That area is holding up. Is downside support right now, but we have a few numbers coming out of the United States that are going to be catalysts for action. And right now, the dollar is sort of topsy-turvy. We've already priced in probably running rate hikes at the February and March meetings of about 1/4 point apiece. The odds are heavily favoring that type of dynamic. So as we look across the board, we say, okay, what could possibly shake us from that global recession narrative? Remember, if the economy slows down, you see a big pullback in consumption and sentiment and maybe a spike in unemployment. We have a lot of pressure being put on those central bankers that can't necessarily raise rates the way that they would like, and maybe they have to stand firm or stand pat, at least, a lot like the Bank of Canada. Thursday gives us a collection of metrics. Just a quick look at the fundies. We've got core durable goods. We've got core PCE prices. That's a huge one for Q4. Core PCE, that is really the reference point for the Fed. They like to look at PCE price indexes much more than they do CPI, and we're looking for a drop in core PCE from 4.7 to 4.5%. We're also looking for a big spike up in durable goods orders. Core durable goods orders were 0.1% last time out. Now, in just durable goods orders, month over month for December, we're looking to increase from November's negative 2.1% all the way up to 2.7%. So we're looking for a very good set of numbers there on Thursday. If we don't get it, what happens to the dollar index? I'm going to be watching 102 flat, 102.35 is key downside support. If we do see these numbers come in as expected, we could definitely see more bearish action in the dollar. dollar. And if we do see the dollar continue to weaken, sort of on that everything is rosy economic narrative, then we are looking hard at that 78% down at 98, 94, potentially a hard test of 100 very quickly. Now, if the opposite's true, if these numbers do disappoint, then there's going to be more questions. And perhaps if this set of PCE numbers comes in hot, there is a chance that we might start talking about a half-point rate hike at some juncture within the first few meetings of 2023. A lot going on Thursday. I think the dollar index and just the USD across the board is going to be the place to be. Get ready for big-time FX volatility across the majors. All right, for Friday's session, we're going to be looking at WTI crude oil. Now, we have a collection of metrics out that aren't necessarily facing oil, but we've got another set of those PCE numbers really on the way. And right now, PC is everything. Inflation's everything. So on Friday's session, be careful. Be careful. If these inflation numbers come in less than expected, then you're going to be in one situation with commodities. If they come in higher, if they come in much higher, inflation is still hot, then you're going to see hawkish dollar, bullish dollar, commodity prices will drop. So I've got oil on my radar for Friday. This is a good look at the March 2023 contract. It's important to understand that we have now rolled from February CME WTI futures to March, and what that is that's the catalyst for your U.S. oil CFD. So as I look at the March contract, I want to point out this macro trend. This goes back to November, December of 2021, and that was right after that Omicron scare. After Thanksgiving of 2021, we saw the lowest crude oil prices we've seen ever since. So we're looking at about 61 down there, and then we see the massive run up. Russia-Ukraine tops out, and since then we've sold off, but now we're in a compressionary zone. Now we're in rotation. So for me, if I'm trading this futures contract, March CME WTI, I'm looking at 83.05 to the top as being an absolutely huge number for us, and you can see we're right on. We're going to be very near it. And then as a support level, I'm looking at 62% down there at about 77.87. That's a tight zone, and right now you can see these running monthly dojis. We are certainly in that neighborhood. Just a quick look at U.S. oil. Now remember, U.S. oil is now tracking the March contract. It's now firmly tracking March. It's off of February, and you see the market dynamic and the price action is very, very much the same. So if I'm trading U.S. oil, I'm going to build a Fibonacci retracement sequence a lot like that. Spike low to spike high, and now we're rotating between 62% and 78%. So to the downside, I'm going to be watching 76.68, and to the top side, 87.91. If I wanted to get just a bit more current and go to a weekly chart to observe the level of consolidation we've seen right around 76.68, there it is. Look no further. So right now, crude oil is in consolidation. Those numbers that we outlined, 87.91 to the top, 76.68 to the bottom. That's a pretty solidified trading range. Remember, we can always sell the top, buy the bottom. That's how we range trade. So that's enough from here. I'm going to send it back over to Connor, and we're going to get you on your way to have a great trading week.
So a mix of inflation data, central bank decisions, and GDP data. This week is sure to present opportunities. The markets are really starting to take shape now after weeks of consolidation. Now, as always, our team of analysts will help guide you through these opportunities every single day in the trading room, ensuring a high quality service. We'll help you make the most informed trading decisions and, of course, be with you every step of the way. Until then, trade well, and we'll see you on our next live stream.